This is Tax Chats. Hello, I'm Scott Dyring.
And I am Jeff Hoops.
And we're here to chat
about taxes.
Hello again, and welcome to another edition of Tax Chats. I'm Scott Dyring, professor of accounting at Duke University, and I am joined, as always, by my friend, my colleague, accounting professor extraordinaire, tax museum curator, and tax museum chairman of the board, Jeff Hoops. Hello, Jeff.
Hello.
How are you doing today?
So good. I did get the chairman position at the tax museum, so that was good. It was a riveting board meeting, and I made it. I did it.
He made it. He managed to work his way up all the way to chairman of the board. Today, something that chairman of boards everywhere might be interested in: how much of their income should a rich board chairman pay? We're going to talk about tax progressivity. And this is a topic that comes up every time when we teach our tax classes. What about progressive taxation? And so I often say to my students, what is a progressive tax system? And they often have answers, but it turns out if you challenge them just a little bit, the answer of even what is a progressive tax system is not as simple as you might think. And why we might desire a progressive tax system can be a little bit complicated. And then whether or not we in the United States currently have a progressive tax system can also be a little bit more complicated than you might think. So today, we're going to clear up all of the complications and bring sanity to this world of progressive taxation. Correct, Jeff?
We're going to make progress on tax progressivity, if you will.
That's right.
And so I think we should start off. So since you ask your MBA students and they gave you all bad answers, you should give us... I
didn't say they were all bad. I just said it's complicated.
You should give us the good answer. How do you, Scott Dyring, define tax progressivity? What is a progressive tax?
If my mother asks me that question, I say someone who has more money pays more tax. Now, I left that extremely vague for a reason, because when I say more money, does that mean income? Does that mean wealth? And the typical person doesn't even think about that. They just think those who have a lot should pay more.
Rich people pay more. That's it.
Rich people pay more. That's the common definition. Rich people pay more. But it turns out in our income tax system, or not just our income tax system, the tax system that we use in our country, we don't often tax wealth. We often tax income, most commonly. So probably a more precise definition would say those who have more income pay more tax.
And is it just more tax in dollars?
So I would say, if we want to get even more precise, most people would say it's something like, how much tax do you pay as a percentage of your income?
Rich people pay more of that.
Rich people
high income people, now that we've switched from wealth to income. High income
people should pay, if you have a progressive tax system, high income people should pay a higher fraction of their income in taxes.
Okay. Or rather, I would summarize by saying the tax rate is increasing in your income.
The effective tax rate is increasing in your income. Correct.
Yes. Okay. I can live with that for now.
Yeah, for now. But why did I say your effective tax rate, Jeff?
Yeah, because you could think about an effective tax rate or a marginal tax rate increasing with your income, and it gets a little bit more complicated there.
Okay, so tell us. I'm going to turn the tables
maybe more
here just a
complicated
little
than we
bit.
want to talk much about, but it gets more complicated there.
Well, but it's not that complicated to think about the difference between a marginal tax rate and an effective tax rate. So what is the difference between those two things?
So a marginal tax rate is how much in taxes you pay if you earn like an extra $1. It's the simple way of putting it. So if I earn an extra $1,
if Jeff works an extra hour today and he gets paid an extra $1, because Jeff makes about $1 per hour,
Yeah.
How much tax will Jeff have to pay on that last dollar that he earned?
Or actually, in a better way of putting it, this is not even made up. Literally the case. I was doing my taxes on Saturday night because, of course, I wait till the very last minute, and I had forgotten that I earned $100. And so when I type in an extra $100 into TaxSlayer, my tax software, what rate does that extra dollars get taxed at? So if I put in $100 and it says that I own $10 more in taxes, well, then I had a marginal tax rate of 10%.
Of 10%. Now, in Jeff's case, because he makes so much money as the chairman of the board of the museum.
Chairperson of the board, actually. You misspoke, but we're fine.
Chairperson of the board of the tax museum. When Jeff typed in 100, it probably came back closer to $30 of additional tax. But I'm guessing that your effective tax rate was probably not 30%, meaning that if I took the total amount of tax that you paid and divided by the total amount of income you earned, my guess is your effective tax rate was probably somewhere closer to 20%. Am I right?
It would be lower than my marginal rate, kind of by definition in a progressive tax system.
Yep. So your average rate, average effective rate, oh my goodness, I can't speak. Your average effective rate will be lower than, almost always, your marginal rate.
Okay, so I think what I should do is I should tell you about a few kinds of taxes we got here in this amazing country we live in, and you should tell me why they are or are not progressive. We have a definition, and you tell me. Okay, number one, A, the federal income tax on labor income.
Okay, so I like that you asked a very specific question, and when I say specific, what I mean is you asked about federal taxes, not some other kind of tax, federal income taxes. Federal income taxes on labor income, which means I go to work and somebody pays me a wage. And the answer to that question is yes, federal income taxes on labor income are progressive. And we know that for two reasons. One, if you just look at the law, as your wages increase beyond a certain amount, the tax rate that gets applied to those wages gets higher. And secondly, if you look at aggregate data on labor income, those who make more labor income will pay higher taxes.
Okay, I would agree that with one small caveat, which is actually pretty interesting. My first high-level media citation was about exactly this point. I was quoted in the New York Times in like 2012 or something like that for having a very high marginal tax rate, and I was a PhD student making very little money with like 4 kids. So why did I have a high marginal, well, 3 kids, I guess. Why did I have a high marginal tax rate? Because I was on the phase-out region of the Earned Income Tax Credit, which actually gave me a high marginal rate. So EITC notwithstanding, I would agree with your assessment. Federal income tax on labor income.
I was in that same boat when I was a PhD student. We made very little income, but we did make income. We had 3 children, and the Earned Income Tax Credit was an amazing thing and something we should actually probably have an entire episode about, because marginal tax rates at certain points in the income distribution get really screwy if you have a credit like the Earned Income Tax Credit, and that's what you're talking about. But overall, the average effective rate overall, without any weird complications, is progressive when we're talking about federal taxes on labor income overall.
Okay. What about at the state level?
Okay, that gets more complicated. Labor income at the state level will be progressive or will be flat depending on the state in which you live, or may not exist at all, because there are some states that do not have income taxes on wages. There are some states that have a flat tax on wages, and there are some states that have progressive tax on wages.
Okay, so enough with labor income and federal and state taxes. What about property taxes?
Property taxes. Well, now things have become more complicated, because now I have to think about what we mean by progressive. With labor income, I can pretty easily say how much did I earn naturally goes in the denominator, because it's sort of tied naturally to the taxes that I pay. But with property taxes, I might not have earned any income, but I still own property and I might pay taxes, or I might have earned a whole bunch of income and I may not own property, in which case I don't pay any tax. So progressivity immediately becomes more tricky because the tax base, or the thing that we tax is not a function of income, even though it might be correlated with income. But on average, people who have higher income probably own bigger properties, which means that on average, people with bigger properties will pay more dollars in tax and are less likely to rent, which means that probably if you look at the aggregate data, property taxes are likely to be progressive, but only mildly progressive would be my guess. How did I do?
Yeah, I would agree with that. There's like a dozen different little provisions and things you could add. So, for example, the difference between how much you remit and the burden borne because your property owner that you rent from is paying property taxes. Let's just forget about that for now. It's too complicated, the incidence question. But yeah, to summarize, at the very first definition we have, rich people got bigger houses pay more property tax. Now, the average rate isn't actually different as a function of the house size, and that's the way it gets complicated. But I would say most people would call it a progressive tax, even though you could certainly define progressivity, so it's just flat.
Yeah, and it also gets complicated because you don't have to have very much income in order to have property.
You could have incredibly large negative income and have a very large house.
That's correct. In fact, I'm sure there are many a farmer listening today who has a lot of land and pay property taxes, but maybe lost money on their farm last year.
Yeah. It gets a little tricky when it's a non-income tax. And then also when, we're thinking about progressivity is how much high income versus low income people pay, what percentage they pay. And it's tricky when that's just associated with just the things that they do and not necessarily that's directly and mechanically related to their income. So the next example of that, what about the excise tax on cigarettes? If you buy a pack of smokes, there's actually quite a lot of tax associated with that. How do we think about the progressivity of those taxes?
Yeah, very interesting question, because now what I'm talking about is not something that's connected with my income, but it's something that's connected with my behavior.
Or income or your assets or your wealth or anything else. It's just something
and
you
in my case, I don't smoke. So my cigarette tax rate, marginal cigarette tax rate, effective cigarette tax rate, whatever you want to think of it, is zero.
Your marginal isn't zero.
The marginal rate because
the next cigarette you smoked would be subject to tax.
That is true. So my marginal tax rate is not zero, but my effective tax rate on cigarettes is zero because I don't smoke them. But my guess is if you did something similar, if you said, what are the demographics of the people who smoke the most, we probably would find something that's almost regressive, because my suspicion is, and I'm not an expert in this area, but my suspicion is people with lower incomes are probably more likely to smoke, which means as a fraction of income, my guess is lower income people would pay more taxes on cigarettes than high income people.
Yeah, and I would say there's actually two different reasons for this. It's that imagine rich people, so if you're defining progressivity relative to your income, if rich people and poor people smoked exactly the same, it would still not be progressive because as a fraction of their income, you can only smoke so many cigarettes. And so as a fraction of income, it's just going to be a larger share the lower your income. But then the second piece is what you're mentioning, which is true, that lower income people smoke more cigarettes.
So, for example, if Tim Cook, the CEO of Apple, were smoking 10 cigarettes at a time all day, every day, as a fraction of his income, the total amount of tax he pays would be minuscule. But if someone who makes, say, $50,000 a year smoked even one cigarette every hour, the fraction of tax as a proportion of their income would be much higher. So that would reflect a regressive
It wouldn't round
system.
to zero.
That's correct.
Yeah. Okay. So there's 4 examples. We've got a little bit better idea what progressivity is. We've added a term we didn't define, but I think we all know what it means: regressivity, which is just the opposite of progressivity. So now the question is why, I mean, we've talked about this as if this is a desirable thing, that we should have a progressive tax system. And we have to define it so we can make sure we have one. We're later going to talk about how we measure it to make sure we have one. Why do we even want one? What do you think about that?
The first reason is because people believe in some form of fairness. And so many people look at the world.
You just said the F word.
that is a form of an F word, yes, and but not a 4-letter one. Well, actually, if you put fairness, it's only it's more than 4 letters. But if you just say fair, and in fact, this happened to me again this weekend. We were doing something, and our kids were disputing, and I said, "What's the problem?" And they said, "It's not fair. You're letting him do something, and I don't get to do something." And I said, "What's the most common answer that parents give?" The most common answer that parents give is life's not fair. But it turns out most parents think that life should be fair when it comes to taxation. And so they believe that sort of feelings of fairness imply that those who are rich should pay more. So that would be like the first reason.
You've literally just said fairness, and then you say feelings of fairness imply. Like, where did that come from? You just completely made that up. So where does that feeling come from? Like, what like first principles means that fair means that rich people should pay more?
Well, I don't know exactly what you mean by that, but I think I would take it. One way to say that is something like this. You need the ability to pay. And so one notion of fairness is who has ability to pay. If it requires all of my income just to buy groceries, provide a shelter over my head, and to put clothing on my back, I don't have anything left to pay. But someone who has high income can put food on the table, can pay for their house, can put clothing on their backs, and still have plenty left over. And so if you want to think about what's fair, then maybe those who have extra should pay for the things that are useful for society.
So there's like a fixed cost of living, and we should just like let people off the hook a little bit as they're just buying the most basic things, but then as they have more, they should pay a little bit more. Okay, I have a fancier explanation for you. You ready for this?
Okay.
Okay. It has to do with the marginal declining utility over wealth. The idea here is that when I was a PhD student and relatively poor, if you gave me an extra $100, it made me really, really, really happy. If you give me an extra $100 now, it makes me really, really happy. If I give you $100, since you're way more rich than I am, it just makes you really happy. If you give Tim Cook an extra $100, he won't even notice. Doesn't do anything for him. So the richer we are, if we get extra money, it makes us increasingly less happy the more wealthy we are. And while it's not exactly symmetric, we could think about it as roughly symmetric. That applies also with taking money away. So if I take $100 away from Scott, I mean, he's a little upset, but it's not that big of a deal. If I take $100 away from Scott when he's a PhD student at UNC, by the way, just throw that out there, he's a PhD student from UNC. If I take $100 away from him back then, he'd be a lot sadder, right? Because $100 is worth a lot more to him. So and this is kind of what I was talking about, under the theory that we should be trying to maximize societal utility by making as many people as well off as possible, like collectively, then we do that by taking more away from people who feel it the least. That is, we take money away from the rich because they're not as hurt by it because they have, against the fancy term, a marginal declining utility over wealth. What do you think about that?
Yeah, I like that explanation, and I use that in my class as a justification for what sometimes we call income redistribution. And basically the idea is this: I can take something away from, I'm going to keep picking on Tim Cook today. I can take $100 away from Tim Cook, and he doesn't hardly even notice, and I can give it to somebody who's a starving student, and they are just thrilled to have that extra $100. And so Tim Cook's not any sadder, and the other person is much happier, and collectively in society, then we are happier overall. I think it's reasonable. It certainly has limits, but it's a reasonable way to think about the world.
So you said you use that to explain income redistribution. What's the difference, or what's the connection between income redistribution and progressivity?
Well, one one connection is this. So what you were talking about was just one side of the equation, which is the government taking the income.
Correct.
The other side of the equation is
you have to make the evil voice. Taking the income.
Yeah, taking it. Da, da, da. Okay, so the government's going to take your income, and by the way, it took my income. Well, I filed my taxes. Jeff was saying he filed his on Saturday night.
I was doing them Saturday. I filed them today, like half an hour ago.
Okay, so I'm almost worse than you. I started on Saturday night. I could not bear to finish. I finished on Sunday night, fearing that something would come up that I would have to resolve on Monday. Turned out it was fine. So I did file on late Sunday night electronically. Okay, so the government took all my money, but they're not going to just take that money and burn it. They're going to take that money and do something with it, including possibly directly giving it to someone who doesn't have very much money. And so that's where the redistribution part of it comes in. The government doesn't literally take only from rich people. They give sometimes to poor people.
Yeah, I would say they're pretty. I mean, you said it, literally, you said, as long as they don't burn it. As long as they don't burn it, and as long as they're not taking rich people to just like shuffle things around and give back to rich people, then they're the same thing. A progressive tax system
we could even think about it like this, like the marginal benefit of, say, for example, a national park might be like much higher for somebody who's relatively poor because they don't have a 300-acre estate that they own that they can go relax on. Buy yourself a private
island if you're rich, yeah.
Yeah. So if you're really rich, you just have your own national park. You don't have to bother, using the public one. But the relatively poor benefit from that. So you don't have to literally give a check to the poor people. You just have to use it in some way that benefits them.
That really seems like it'd be on The Simpsons or something like that, like where rich people literally have like their own private Grand Canyons that are even bigger than the real Grand Canyon, but only they can go to them or something like that.
And some people in today's world are rich enough they could probably almost buy a national park. Yes,
buy
it is
Grand
in fact
Canyon. True. Yeah. Okay, so that
or for example, if you're really rich, you could just, I don't know, like buy Twitter, for example.
Yeah, you could do that. Maybe if they allow
if they let you.
So we're just talking about this marginal declining utility over wealth. That does hinge upon this very strong assumption that like it is society's role to maximize our collective utility. We could go on for a long time about shortcomings about utilitarianism and where that would be challenged, because in the end, like if you're using that justification, well, almost everybody in the United States is a lot richer than a lot of people in other countries, and it gets complicated from there. But let's stick with what we got. And so now the question is, we've talked about defined progressivity. We've talked about 4 different kinds of taxes. We have a kind of a justification for this progressivity. So the question is, do we even have a progressive tax system here in the United States? What do you think about that?
Well, it probably... what I think is going to be based on what I've seen, and that's probably going to be true of other people. So if we just asked, 100 random people, do we have a progressive tax system? We might actually get a lot of variation in the responses because
how many of those do you think could give any reasonable definition of progressivity?
Well, that's where I was going, because I think some people would say, oh yeah, I've seen the tax rate schedules. They look progressive. So yes, we do. And other people would say, I saw an article in the New York Times that said, really rich person like Jeff Bezos at Amazon didn't pay any tax. So no, we must not have a progressive system. Or people will have seen things, and what they've seen might taint their perspective one way or the other. Not necessarily taint in a bad way, but skew their perspective one way or the other. So what I would say is, yes, we do have a progressive tax system, and it is almost entirely the case, with maybe some very few exceptions, that the very poorest people pay less in taxes than the richest people.
As a fraction of their wealth.
As a fraction of their income.
Yep.
As a fraction of their income. And I think that's a really crucial thing to point out, because there are some people who have extraordinary wealth but very little income, and then they don't necessarily pay tax. So it depends on how you define things.
Yeah, then you're just going to redefine. You could easily redefine income to make it so that, to make it so. And
interestingly enough, I think many of the fights that we have in this country politically are not about whether we should have a progressive tax system. It's really about the degree of progressivity. So I think if you were to talk to most people on the right, they would say, yeah, the rich should pay more than the poor, but they might say something like, oh, the poor should pay a little bit and the rich should pay, I don't know, 35 or 40%. But if you talk to somebody who's maybe very far on the left, they would say the poor should pay nothing at all. In fact, the poor should receive benefits, and the very, very, very rich should pay something like 80 or 90%. Both of those are progressive. What's different is the degree of progressivity.
Yeah. So I think we should dig a little bit deeper on whether we have a progressive tax system, because it's pretty complicated. So first of all, I intentionally said tax system. We have a lot of different tax systems. So there's been some work on this.
Here you go, changing definitions on me again, but
several
that's
different
fine.
people recently. So when I started out, I said a federal income tax on labor income. So you have taxes at the federal level, at the state level, at the local level. It becomes complicated when you think about all of those different things. So for example, while a low-income person, many, many, many low-income people pay a negative amount of federal income taxes, but they pay an incredible amount of employment taxes, of Medicare, these kinds of
Sales taxes.
They pay a lot in gasoline excise taxes. They pay a lot in tobacco and alcohol-related excise taxes. They pay a lot of different kinds of taxes. And it actually can add up quite quickly, right? And
Correct.
So when you think about not just the federal tax system, you think about all these different kinds of taxes, it's a lot. And so let's take one example, sales taxes. Why is sales taxes, why is this complicated? It's kind of this argument that we were talking about before. A poor person will spend 100% of their income on stuff, right?
And not just random stuff that they need.
Stuff that they need, right?
Yeah.
And so we've explicitly, in a lot of states, made it so that food isn't subject to sales taxes, but a lot of the stuff that they buy will be subject to sales taxes. Whereas a higher income person, they might spend only like half of their income or a third of their income or 75% of their income, and that savings portion isn't subject to sales taxes at all. So you could think about the sales tax as a fraction of your income. It's actually being regressive. And for a lot of people pay a lot in sales taxes as not being progressive, but as being regressive because lower income people have a higher marginal propensity to consume. They buy more stuff with the little income that they have. So again, the taxes portion gets complicated because you can get into all these different kinds of taxes. And also the income portion is also complicated. So for example, what do you do with this, Scott? When you were a PhD student and when I was a PhD student, and at other times when I wasn't a PhD student, we got the earned income tax credit. Does that count as income?
You mean when I'm making my
I'm making money
determination of whether or not something is progressive?
when I'm doing my average. I went to calculate the average effective tax rate. Do I put that on the bottom, also called the denominator?
Yeah. So it turns out there's not consensus, at least among, that I'm aware of among academics, as to whether or not those what I would call transfers from the government to the taxpayer should be considered income. At some level, you might say, well, yes, they should. They're income just like any other income. You just didn't get it from an outside source. You got it from the government. And other people would say, no, that's not income. It's just something that the government gave you. So I think it depends on what your definition of income is, and it depends on what your definition of progressivity is.
And what gets amazing here is, let's say that we want to redistribute more. We want like a system that helps lower income people more. And so we're going to increase the earned income tax credit by a lot. So we give low income people a lot more earned income tax credit. What are they going to do with it? Well, they're going to go buy stuff. And some of that stuff will be subject to sales taxes. So if we're calculating the rate what we use to figure out progressivity, and we include sales taxes, and we don't include transfers, government transfers, which some people do, then by helping poor people, we're going to increase their tax rate, because we haven't included a transfer as income and we have included the sales taxes, and we're going to make our income tax system look less progressive by giving out more generous earned income tax credits, which is a little bit crazy.
It is a little bit crazy, because what that implies is the government could never remove low-income people by giving them, when I say remove, I mean make them not low income anymore by giving them something, because it would never,
by definition,
it would never be counted in their income.
You cannot create, you can't get rid of you can't make low income people high income people by the government giving to them, because by definition, that's not income.
And unless you decide that government transfers are in fact income. And so that's actually quite a controversial thing in the literature, and people disagree. But one thing that we should point out to people who are listening is, when you see in the New York Times or the Wall Street Journal or the USA Today or wherever you get your news, when you see a figure or an article that talks about progressivity of taxation or how much tax people pay as a fraction of their income, you should be very conscientious of examining what was included in the denominator. Sometimes it's one thing and sometimes it's another thing, and how researchers choose to measure can very dramatically affect the results that they arrive at and the conclusions that they draw.
Yeah, and not only the denominator, but the numerator as well. So I started out saying, what taxes do you include in there? So it's often the case that we'll sit around and we'll talk about federal income tax policy and how progressive our tax system is. And you have people saying, "Oh, we don't have a progressive tax system at all. Overall, it's regressive." And they'll show you these statistics, and they look at sales taxes and pass through property taxes and excise taxes and gasoline excise taxes and all these different things. And you got to say, hold on, wait a second. We're trying to change the federal income tax system here. All of these different components that are creating this issue are not levied at the federal level.
And they're not levied on income.
And they're not levied on income either in most cases, although they could be levied on things correlated with income. They're not levied on income. And so, I mean, it may be the federal government's responsibility to change its tax system to overcome the regressivity imposed by municipalities and the state, but it might not be. But you have to think about that. The top of the fraction's complicated, as is the bottom of the fraction.
Well, and we could take the exact argument and go to the other side of the income distribution, to the extremely wealthy, and we might say, look at Jeff Bezos. He didn't pay any tax, but he's so rich. And some people would say, not only is he rich, he has income. It's just a certain type of income called unrealized income. So he paid no tax on his unrealized income. And what you have chosen to do there is include something in the denominator, which is unrealized income, but nothing in the numerator. But then you could say, maybe we should look at the corporate taxes paid, which is a thing that maybe we would say would fall in the numerator. And we sort of pick and choose what we're trying to,
and then you realize
Amazon
doesn't pay any of those anyway, so
it turns out Amazon doesn't pay. So that was a terrible example, but we could use a different company.
Find some company, the one company on earth that actually pays taxes.
Yeah. But it is fun. It is fun to think about, because if a researcher desires to make a point in a newspaper article or in an academic article, and they choose what goes in the numerator and what goes in the denominator, you can almost always figure out a way to make a figure that shows what you want it to show. And if you're not a careful reader of those studies, you could easily be deceived.
Don't be deceived.
Don't be deceived. On that happy note, I think we should wrap this up. It's very fun chatting with you as always, Jeff. Thanks for your insights on progressive taxation. It sounds like it's a topic that we will have to visit again sometime in the future. This has been another edition of Tax Chats. I'm Scott Dyring, joined by Jeff Hoops. Goodbye.
Goodbye.